Welcome back to It's a Numbers Game. I'm Adam Morris here with my partner in finance, Daniel Welling. Today we are joined by Tamir Hoskins, or Tim for short. And Tim is our bookkeeping coach at MSP Finance team. And she spends her days turning messy ledgers into laser-focused insights for MSPs. And she's fresh from uncovering thousands in unclaimed VAT and plugging cash flow leaks for our clients. So stick with us for the next half an hour, and you'll hear the 2-minute VAT sweep Tim uses to spot refunds most MSPs miss, applied but paid, zero tweak, which accelerates customer payments without damaging relationships, and a simple chart of accounts makeover that shows exactly which services fatten or flatten your margins. If you like the sound of more money, fewer surprises, and cleaner numbers, stay tuned. Tim's about to show you how.
Tim, welcome along.
Oh, hi. Thanks for having me.
You're very welcome, and we've been threatening this for a little while to bring you onto the podcast. And I think we've got a really interesting episode ahead for our listeners. Obviously, there's a little bit of self-promotion, shameless self-promotion in this for us, as Adam will have explained at the beginning. But equally, we all agreed that we'd like our listeners to leave with some value from this by way of a tip or something for them to look at in their own business that perhaps they wouldn't have done before. So in terms of getting us started, Tim, perhaps we could actually just talk about some of the situations that you've encountered in working with the MSP market, perhaps some quick wins that were established in the early stages of providing bookkeeping coaching.
Right. Okay. Yeah, sure. Let's give it a go. So, my experience with MSPs actually started a long time ago, and I've sort of fallen into it from the accounting perspective. I've been in accounts positions all of my life, and obviously accounts backbone of the finance of what a company's doing and with the systems. So then naturally you get involved in that. And then for my sins, I then actually went to work for an MSP provider. So I hope I have an understanding of what the industry is, what people need from it, what their challenges are from that. And so obviously what information we can help them to get from their accounting systems that's going to help them alleviate those challenges but those sort of day-to-day systems that they have. So with obviously the tutor, it's guys that want to do their own bookkeeping, and we will help them with sort of identifying maybe some of the processes and procedures that they might not be doing, that maybe they should be doing, that's going to help them. And also, I understand that they're very with the computer elements that they're doing, the services they're providing, and bookkeeping and dealing with books just in general is always a little bit daunting. And I think, we all kind of have an ostrich moment, don't we, where we put our head in the sand and kind of think, oh my God, I can't do this. So I think it's kind of nice to have someone there that, you can talk to. It's a bit like that sort of live support that you don't always get with an IT package and the questions. And sometimes you feel like you can't necessarily ask your accountant because, you maybe only have interaction with them once or twice a year and stuff, So hopefully we provide that. So let me think. Situations that we've had. Well, some of them have been like kind of quick, easy wins and stuff on there. So we will, as part of what we do, obviously we're going to go through some of your regular transactions, things that you need to do. One of those is, for most of us, unfortunately, filing VAT returns. So we will start to look at the VAT return and go through and make sure that the different component parts, the different boxes, show what they should show for you, that you've got the right transactions in the right elements in there, and that it all looks, correct and present. And with one of these guys, we noticed we were looking at the amounts that were showing in the zero box, because it's not only looking at what's in box, your sales VAT and your purchase VAT, but also actually what are you not putting in? What are you not claiming for? And we noticed that there was actually a high volume just for that particular quarter of bills that were related to telephone sales and stuff, so mobile phones, things like that. And he was just posting those without that at all, rather than, because it was just kind of like quick. He was just saying, it comes on the reconciliation tab on my bank rec. And I just quickly post it. The system prompts where to post it to. So I just quickly post it to telephone. I didn't even notice that it wasn't picking up that element for it. So we went through and found these transactions, and we were able to quickly actually correct those for him and claim back the VAT, not just for that period, but obviously prior periods as well. So that was a nice adjustment to the VAT return for that quarter for him. And hopefully going forward, he'll remember to look at some of the other bills and see, actually, what shouldn't I have?
Just out of interest, Tim.
Yeah.
How long are you able to go back in time to collect unclaimed VAT?
So you can collect VAT, like if you've honestly not put something through that you should have put through, then you can go back up to 4 years, depending on what the services are that are in there for your business. And if it's still something that's being used by the business and utilised for the business purposes, in this case, it was a business mobile phone. So, so you can go back and you can adjust. And HMRC are quite happy for you to, claim for things that you inadvertently didn't notice that you should have done. Obviously, provided that you also make sure that you do, be honest about stuff that you maybe did claim and you shouldn't, and you make adjustments.
And so this was going back more than a year, I'm assuming.
It was probably, I think he had probably had the contract, it was around about 18 months.
Okay.
That he had the contract.
So in other words, you can't just rely on your accountant for the year end just to pick this stuff up.
No, absolutely. I mean, the thing is that obviously, there is so much information. If you think about the transactions that are in someone's books that an accountant might be looking at, generally they're going to kind of come in at top level and look at the surface of what the allowances are and what you're allowed to claim for and not, from is that a legitimate business expense or not perspective. They're not going to obviously analyse every transaction for you and have a look and see, did you claim all the VAT you should have done? Yeah, absolutely.
And this is, I guess, one of the common misconceptions, especially at the small end of compliance accounting, where effectively you are producing unaudited accounts. So there is no interrogation, no deep dive. If an accountant happens to notice something chunky and think, oh, I would expect there to be VAT on that, maybe they dig and uncover it. But generally, they're trying to compute an approximate number for corporation tax and for producing the statutory accounts.
100%. Yep, absolutely. And and like I say, their focus is probably more on that kind of that high level tax that they're looking at there, but rather than an individual transaction basis, obviously they're going to look and see, make sure you're not claiming for something that you shouldn't be, sort of generally, but that's more of a casting an eye over some elements of your P&L rather than, deep diving into each individual account transaction.
And is the reverse also true, Tim, where you could be claiming VAT incorrectly and, effectively, be in debt to HMRC?
Yep, absolutely.
And come knocking on your door, and this stuff, again, could mount up over the years and be material.
Oh, absolutely. And that's why, from our perspective, we like to go through the VAT returns with people and just cast a little look. We'll also do those little things that, you'll look at, for example, for most businesses, most of your income, unless you've got some kind of exempt business, most of your income is VATable. So you'll be charging VAT to all your customers. So just a quick tip there is that the box 1 for your sales VAT is going to be roughly 20% of the figure that's in box 6, which is your total sales. So that's kind of like a quick look up sort of thing. And again, if there's a big disparity between that, you might then investigate and think, right, okay, why is that one not there? And, is it a case of, yep, do you know what? There was something that I sold to someone abroad and therefore there's no VAT on that. And so quite rightly, that the amount was less or it shouldn't really be more. That's going to be, if it's more than 20%, of your sales, we've got something wrong there. But certainly the other way around, it might be that it's slightly less than 20% of that figure in box 6. And so it's just little things like that we will look through with people and just make sure that, that sanity check thing that, that looks about right and where we would expect it to be. And so we'll pick that up, not just with VAT returns, but, with other reports and stuff as well. So, yeah.
And beyond VAT then, what's the sort of next key area that perhaps you look at when you're assessing a new client that you're working with? Where do you go and look next?
Cash is key. So obviously we want to make sure that, we're getting all the money into the business that we can do. So we might start to look at the aged debtors and have a look and see, what the aged debtors is. Is it running rather high? Is there a reason why it's high? What we might be able to do and adjust to be able to get some of that money in a little bit sooner. So there's obviously little things within the actual software itself. We like to use Xero for most of our clients. And so there's little reminders that you can set up and you can have those. And I find not just the late reminders, because, that's fine. But actually, I find what tends to work well with a lot of customers is that pre-reminder that comes in that just says, maybe 7 days before the end of the month, just reminding you that this invoice is becoming due. And it feels a little bit less kind of telly-offy kind of to people than, this is late and stuff. So, we can help to set things like that up that just, again, it's just a perception thing. It's a little tweak, but it will also run in the background automatically for you. So if something is late coming in, then people will get the reminder for them. And obviously, based on that, you do want to make sure that you reconcile your bank statement timely. We don't want reminders going out to people that, because you haven't actually looked at your reconciliations of the bank receipts that you've got for maybe a month, and people are getting automatic reminders. I mean, that's another, on the converse side, that's something you might want to make sure that, it's good to be timely with stuff. And if you can't be, maybe turn the reminders off in the interim for a short period of time if you know in advance that maybe, a situation's coming up where you won't be able to look at them. You don't want to annoy your customers as well. Anyway.
I was just going to say some really great tips there, actually, especially the timeliness of the reconciliations. You do not want to get that wrong, do you? Because there's nothing worse than a client seeing these things come through and, hang on a minute, I paid you a week ago. What's going on?
Yep.
And just also that kind of review of the messaging and the tone. So you can obviously switch these messages on with Xero, but they just stock emails, right? And
they are.
won't
You can adjust them.
Yes, exactly. That's what I'm saying. So they don't necessarily reflect your tone or your brand in how you communicate. I think it's a key thing to ensure you kind of do put your own wording in there. It might not necessarily just be like the standard templates that you get in Xero. So I think it's really vital to do that, those processes that you're working through. And again, do you know what? Turn it off if you're going to be away or something's going to stop for a couple of weeks. Yeah, makes perfect sense.
Excellent. And then what do we do after that? So obviously we've got money coming in. We want to make sure that we've got that, but we also want to make sure that we're on top of the money going out. So on the supplier bills side, you want to make sure that, first of all, you're capturing all your bills and not just trying to process costs once they've hit the bank statement and then putting them in. Because you want to know in advance what you've got going out, what's due. We don't want those dreaded phone calls to that, we're late with this or we're late with that, or our own reminders popping in to tell us we haven't paid a bill. So, so again, we'll try to encourage people to try and enter stuff in a timely fashion, and not just from a cash flow perspective. Obviously we want to know what's got to go out at the same time as we can see what's coming in, but also having both transactions, both our sales going out in a timely fashion and our bills being processed into the system in a timely fashion is going to give us a more up-to-date and current understanding of what our immediate outgoings and liabilities are, so that we can plan ahead. Maybe if we've got like a big project or something coming in, we've got some money in, we could put a little bit of money aside. It might be a good idea if you can start to squirrel away in a little extra savings account, money that's for those VAT bills, for example, that we know that they're coming up, if we can put a little bit away and stuff. And again, having all of our information in the system in a relatively timely fashion means that we're able to identify a little bit better that cash position, rather than just relying on that kind of thing that I always do, when I was younger, that you go to the cash machine and if it gives you money, that's great. And if it doesn't, you panic, So we don't want to be doing that with a business, do we?
And of course, cash flow is perhaps one of the overly focused areas for a lot of the less experienced MSPs. And literally the view of, have I got money in my bank account, is the immediate, am I healthy and in a good place? But of course, if there are bills that are due out and you're not seeing that view, then it can give a very skewed view of your current position.
Yeah, yeah. It doesn't make for, a calm week, when you just kind of like constantly panicking and stuff. And I think that even if we're not happy with the amount that it might sort of be and stuff, just to have the information there and to kind of be able to see it, it means you can take that sort of that breath and kind of go, right, this is my plan. This is what I'm going to do, and you can plan ahead and you can work out what you're going to do. Maybe even call, certain suppliers or whatever if required in the short term and see about maybe, some kind of plan or something that you can do, better terms and things, particularly if you're finding that maybe certain customers, maybe bigger customers, tend to pay a little bit later. You do sort of get some that they, particularly if it's a more structured organisation, you find that they might just apply, whether you do it or not, they'll apply a 60-day term and stuff on it. So it might be that, you can maybe then obviously agree something like that with your suppliers in return so that you're, paying once you've been paid. And again, all of this is information that we can see in the system if we have the data in the system.
And I guess the large client that's paying on 60-day terms, they're actually doing that to manage their own money. Hope, therefore, there's a cue there, isn't there, to say, well, you should be applying the same level of control to your own business, but being fair to your suppliers and your customers as well. Adam and I are advocates of being very proactive on that in terms of billing and collecting in advance or at the beginning of delivery so that the cash flow is always in your favour as a business. But clearly that's not something you can easily implement to perhaps a longer standing customer that you've not been disciplined with in the past. So yeah, no, interesting you go to cash because of course it's a key topic.
We'll come back to the podcast in a minute, but first, I just want to introduce you to the mentoring service from MSP Finance Team. How long will you carry on struggling on your own, juggling cash flow, feeling like you're barely making ends meet, when the very reason you started your MSP was not just to help others master technology, but also to secure your own financial future? Or perhaps you've grown your MSP to a good size and are looking to prepare for an optimal sale or acquisition, but have never done it before. We've walked in your shoes. We're ex-MSP owners and have built our businesses from startup to exit and know exactly how it feels to be constantly firefighting or struggling to grow profit. And that's why our mentoring, or call it coaching if you prefer, exists to help you achieve the rewards you set out to achieve in the first place. More profit, more time, and the freedom to focus on what truly matters. So you're probably asking, why should we work with you? Well, we deliver results. Here are just two examples. A 10 million MSP with a 7-strong leadership team but lackluster results. Within just 2 quarters of working with us, their profits began to climb. At the end of year 1, their profits will have jumped from 300k to 1.3 million. But we're not that big, I hear you say. Well, we work with smaller MSPs as well. A 400k MSP was suffering a 10% loss before we engaged with them and were struggling to move forward for years. Again, within a 12-month period, we've turned that business around. They've got new clients, they've got their mojo back, and they made a 10% profit this year. If you'd like results like this, book a free consultation now at mspfinanceteam.com, and we'll discuss a burning issue that's been holding you back and give you several key actions to take away and implement completely free of charge with no further obligations. Don't settle for less. Make your MSP everything you dreamed it to be.
Can we talk a little bit about management accounts?
Yep.
And perhaps the more mature MSP has got on top of bank rec, of being prompt with their own billing and their supplier management, but when they go to the P&L or they go to the balance sheet, it's not giving them the correct information because they've not been following the sort of management accounts processes. So talk us through some of the key areas there that you've worked with someone on.
Well, I mean, so for a lot of people, they'll get a spangly new accounting system and it comes, most of them come with the default chart of accounts, and people tend to just go along with that, particularly if they weren't very established at the time that they got the system. It might be a couple of years down the line now, but they haven't been necessarily very established at the time that they got it. And these systems obviously initially come with a very sparse nominal definition for you, which is not really going to help you from a management perspective understand what your business is doing. You know, they might come with one or two sales accounts, and they're literally just called sales, you know. And then conversely, some of them might have a cost of sales area. Some don't even have a cost of sales area. Some might just go straight to an expenses area. And then they'll also define all those probably in an alphabetical way. So one of the things we will look at is, first of all, from the business perspective, is to try and analyze, just give a little bit more definition so we can understand ourselves where our money is coming from, where we're making money, maybe the areas that we're not making so much money, by giving a few more nominal accounts in there. It might just be something, you know, it doesn't have to be complicated. It can be something simple as much as, from an MSP perspective, it could be recurring services, non-recurring services, recurring products, non-recurring products. You know, we're just going to break down even just into those 4 elements there. That's going to enable us to see, you know, a little bit more about where our business might be growing, where we might need to concentrate a little bit more on it. And then on the cost of sales, obviously, we want to mirror as much as possible those cost of sales that are the direct costs related to providing those services or those products to people, again, so that we can see that we are pricing correctly. We are getting what we're doing. And actually, a quick aside on that, with another of the wins, was one of our guys hadn't been breaking down his cost of sales quite like that, and had kind of missed then where costs had gone up from one of his suppliers, and it was the ancillary costs of additional services that they'd purchased. So in the middle, they were billed for their clients on a monthly basis. This client has so many users, and so they were billed for that. And the clients would increase or decrease client users during the course of the month. And our MSP hadn't actually spotted that they had missed invoicing their customer for that change in the users up and down. Not just that customer, actually, there was quite a few customers that they'd actually missed. I won't say anything, but I'm sure that if he's listening, he knows who he is. And so you know, obviously having a little bit more analysis and stuff there, it meant that he was
not
able
alone,
to see it.
by the way.
Is he not? Oh, good.
No.
And so obviously, you know, we want to help ourselves to make sure that we're capturing, you know, scenarios that might be, you know, something that is going to enable us to make sure that, you know, we are getting the right income and stuff with that. So from the first part of the P&L, we've obviously got that. And then when you come down to the expenses side on the P&L, expenses or overheads, again, if the chart of accounts has that in an alphabetical perspective, it's very difficult to kind of collate similar costs together to see what an overall thing is. So we will help clients to something as simple as just renaming some of the accounts, as well as obviously putting maybe a few more in, but actually just even renaming and grouping stuff together. So for example, premises costs. So, you know, you'll have premises costs and then rent, premises costs, rates, premises costs, heat and light and electricity, which would have been sort of somewhere further up. And it means that when you do look at your P&L, you are able to collate together the figures that relate to that. So you can see what that overall cost is and what it's costing the business. If you're trying to look at line, you know, 6 and line 10 and then line 30 on a P&L to kind of say that's my premises cost, it's very difficult to kind of understand, you know, what it means to the business and actually where you might be able to save money or change things. So we'll add that in. We've done that for numerous clients and that kind of helps. Again, little quick wins of just changing, tweaking something, you know, that you've got already, it's there, but we just need to tweak it a little bit to make it work for you and enable you to get on top of your figures, you know, for you, see, you know, what it all means for your business. It's your business after all. And you want to make sure that, you know, you understand where it is and where it's going and you know, hopefully make it work.
And of course, if you're not of the disposition that you find this sort of thing interesting, this can very much be an overhead and a torturous process. We often sense a lot of resistance against this and often an assumption that this should be far more automated than it is. But of course, if you look at large businesses, they have vast finance teams that are, although using automation, it doesn't make finance automatic.
Absolutely.
And I guess the key thing you mentioned there is that really we're surfacing information that the owner can then consume and make decisions about, such as, I hadn't realised just how much our office cost has grown, and then they're at a rent review point or making a decision about what they do, looking far enough ahead, then gives them the option to say, well, perhaps we should start looking around at alternative options. Where can we save some money rather than these costs just naturally growing and consuming their profit almost automatically.
Oh, definitely. And actually, to your point about the larger organisations, 100%, they will have a number of personnel and they'll be able to do that. But there are things that we can help point you to that actually come with the systems. So as far as automating stuff is concerned, there are things that you can do that can help you to analyse some of these. So there's things like within the software itself, most of them will have like bank rules, and you can preset a bank rule that says, if a transaction comes into the bank, ones that you're not expecting a bill or something for. So it might be something like your bank charges, interest, little things like that, insurance, that they're all, that there's no VAT related to them. So it's not like, you're going to want to make sure you've got evidence of a monthly receipt or something for it. I mean, your insurance is probably agreed at the beginning of the year, but it might be paid in installments. So you want to then process those installments when they go through. So you can set bank rules up, and that will help those to go through, and you can define, how you want those transactions treated. So that's one way of doing it. And then the other thing that you can do, where you have actually got the bills that you want to maybe analyse in a little bit more detail, you could use something like HubDoc that comes free with Xero. If you have a Xero subscription, you get HubDoc for free. And you can define in that, create like supplier rules, and you can then preset it to say, when these invoices come in, and you can actually have like a number of lines on it, so it can go to a variety of nominal accounts, so that you can split that to exactly how you want it to be. So although, yes, from an AI perspective, it's not the AI doing it, but the AI element in those programs will then look at, the descriptions on the invoices and stuff for them. It might be able to help split some of those down, slotting them into the amounts. But certainly you can, if you've got something that's a fixed bill that's coming in monthly like that, you can define and say, X amount goes to this account, Y amount goes to that account, and help to do that. And again, you don't have to be a large company or have a large finance team to be able to use those. It might take a few minutes to set it up, but once it's done, it's much quicker going forward. And again, these are little wins of time here or there that just make you feel like you're winning, you're on top. I'm in charge, I can do this. Because you can, it's not rocket science. It's just having a little bit of time maybe, to sort of deal with some of the other stuff. And if you can get rid of the noise of some of the transactions that are there, then, it will hopefully help you to concentrate on the bits that, might need your attention a bit more.
Very good. And you mentioned insurance there, obviously superb if you get the transaction for April that comes through in April. But if you've paid for the year ahead from May in April, then you of course need to spread that over the course of the year. So any tips around prepayments, for example?
Yeah. So obviously it's good to, you'll know some of your costs that you've to be over a period of time. Maybe just put them on a spreadsheet. There's nothing wrong with a spreadsheet. I love a spreadsheet. I'm that kind of geeky person that's, it's, yep, give me an old fashioned spreadsheet. I'm there. And then you can process like journal. So we'll have a look with our clients and see, what expenses they might have that are going through like that they might have an annual one, but they're typically, that cost is spread over the financial year, or maybe like even over a quarter, however it's spread. And then we'll help them to do journals so that we can post a journal through again. We can use the system to help us. We can preset draft journals that come up to recurring ones. So we don't need to remember each month. They'll sit there in our drafts once they hit the date that we've said we want to do this particular transaction every month or whatever it is. And then, we can help them to spread those costs, which again will give a better when you're looking at the management accounts, it's going to give a better idea of what your month to month running costs and business at the end of the day, net profit is coming through, rather than trying to work out how your business is doing because you've got £5,000 going out in insurance in April, and then your income is coming through in dribs and drabs from your clients on a monthly basis or whatever. So it just gives it a slightly better understanding for you of what your costs are.
And the magic word you mentioned there was journals, of course. And I note certainly in Xero, it comes up whenever you're entering a journal. It's like, are you seriously qualified as a professional to do journals? You're like, whoa, I'm a bit worried about doing this, but just for everybody listening, it's quite okay for you to do journals yourself, and we'd encourage it, right?
Well, hang on a minute. Are we getting ahead of ourselves? I'm not so sure we should be encouraging journals. In fact, that's a question for you, Tim. I mean, for me, this is a dark art, right? You're now into the back end of Xero or whatever, and you can do a lot of damage very quickly. And you're trying to do, it's a question actually maybe around, cost and revenue recognition and journal entries and things like that. Where do you kind of suggest the client stops and a professional bookkeeper takes over? Where do you kind of set that line?
Oh, well, I mean, absolutely. For starters, don't just put journals through willy-nilly. On the plus side, though, the system won't let you do it if it doesn't balance. So at least, it might be wrong.
So
but
if you need to do it wrong, you need to do it wrong. So
exactly.
Yeah.
So, I mean, yes, if you think you might want to be doing journals for stuff, it might be an area that it will help you with processing. I would speak to your accountant maybe about, sort of certain elements if it's going to be to do with, for example, prepayments and accruals and some of these big accounts words that, everyone ducks and dives from when they see them flying around. So, I mean, like a monthly payroll journal and stuff to put through, that's fine. I think where you've got, costs, stuff that's quite regular business transactions, and if you feel you have an understanding of what it is, then, it's fine to kind of set it. You might want to run it by your accountant to double check.
Or you in this
well,
case.
I was going to say, unless of course you've got our service, in which case run it by me. Absolutely. And,
so in other words, you're saying this is absolutely something that they can do either with training or with some support from you or someone else who's clearly qualified as appropriate. Okay.
Yep. Yeah, I wouldn't just, don't just go off and just throw a load of journals in.
With great power comes great responsibility.
Well, it does. It does.
And I think we've reached just about the limit of our time on this episode. I think we could probably chat with you for at least another hour or so. So maybe, Tim, we could arrange another follow-on episode, perhaps even one dedicated to journals, to give people a bit of an understanding of exactly what they are, how to use them, to enable our listeners to be ultimately either getting to a stage where they can produce management accounts level outputs, or indeed just be able to understand exactly what and read a P&L on a balance sheet and understand what they're seeing to make decisions. So perhaps we'd have you back another time. We'd normally offer our guests a shameless plug, but the plug is for us today, right? So
it is absolutely. Yes.
So if you've enjoyed hearing from Tim today and would like to talk to Tim directly, then get in touch with us.
Yeah, I'm going to say my details are on the website or on LinkedIn. So, that we're there. And as with obviously all the MSP team. So give us a call.
Very good. Tim, thanks ever so much for joining us, and look forward to talking again very soon.
Oh, thank you for inviting me. That's lovely. Okay. Bye.